Morning traders, welcome to the Traders Lab. I'm your host Tom B. Can I please get a screen and audio check? And in YouTube, I need to know if okay there, if the audio is clear or if there's popping and distortion. If you could help me with that, that would be useful. Thank you. How are we doing in YouTube? Okay, thanks. So no popping or distortion going on YouTube? Okay, great. Well, that's a step in the right direction. I've been having some problems, which I still have to work on. Uh, and I don't know if you noticed in the stream, there were some issues. Is the audio loud also uh, in YouTube? All this has to do with the streaming software. Um, okay. And how about YouTube? Is it got good audio? I mean, gain control and all that jazz. It's loud enough for you guys? Okay, great. Thanks, Don. Okay, let's get going, huh? All right, everyone. Welcome to the Traders Lab, all. Of course, I'm your host, Tom B., and I always appreciate you stopping by to visit. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream is about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. And I use a top-down, bottom-up approach. Top-down meaning intermediate time frame, down into microstructure, and this is really a function of thinking in fractals, or another way to think of it is a Russian doll. The Russian doll is the large doll and going down sequentially to the little one, but they're all the same. And in trading, the behavior of the market is generic in all time frames. And for me, I don't use time because it can strain the way we see the market. I use behavior, and then that really becomes something called fractals. So we're going to look at that, and we're going to look at today's activity. If you guys were in the stream yesterday, if you followed, I did some live narration, but there's very little time for that in the limited time I have. So I'm going to do is what I typically do, and today's the day, one of those days where, and I have mentioned, and I know and not to repeat myself, but that September would have outsized volatility and range. And I believe, at least my perspective is, the goal of all traders should be develop a process. If you understand process in trading, you might have the potential to participate in outsized rotations. This is what the concept of a fractal is about, because if you understand market mechanics, which is what this stream is about, and you have structured trades that you've vetted so you know where your bus or your trade shows up, your job then is to, assuming you have a statistical edge, and this is the assumption, and if you don't have one, you're gambling. The assumption is, if with an edge, you participate. Now, the variable, assuming you have an edge, is that what's the range of the rotations? That is a variable. However, they all start out looking the same way. So the point of the Trader Lab is to help you understand the market mechanics again, how the market works, why it tends to do some of the things it does, and then understanding where your trade shows up, and then the outcome is random. When we see outsized volatility, we also have processes that I share in the Trader Lab that'll help you manage your trade. And all of this, the outcome from all of these behaviors is a real result of having a plan. That's what the Trader Lab is about. Understanding the business of trading, the reality of trading, not what our fantasy is, because really we'll never know what this business is until we put our toe in the water. And even then, when we attempt to participate in the business, we may have unrealistic expectations and not really understand the business side of this, what this really is and how it works. And it's really a gaming business, and it's simple. This is the whole thing about trading. It is simple. but it is not easy. And it's we can understand it if we break it down and keep it simple. The simpler we keep it, the more we may be able to break it down into conditional statements without ambiguity. And that's what leads to consistency, which gives you the ability to measure it. And like everything, and if you think about gaming, the casinos only play games with statistical edges and they don't change the game. It's a consistent process. That's how they can extract their edge. And that means the dollars flow from the gamblers over time in a random distribution of outcomes, because it's all random, just like interact with the market. It's all random. So if we can compare ourselves to another successful process, which is gaming, we want to be the house. We don't want to be the gambler, even though the gamblers take money out the door from the house. Over time, it's the house that extracts the dollars from the gamblers. In my opinion, that's the mindset we need to have, and then we need to create the edge. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and should not be and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This stream is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. And you have to vet these for yourself. And the Trader Lab exists to help you understand the business of trading and to create a business and potentially have opportunity to have longevity in the business. But it really takes a change of mindset, and a change of beliefs. And it's very hard to let go of what we believe, even if it doesn't work. Because from my experience, I believed all I had to do was keep working on it and that I'd get there. What I found was, for me, I kept waking up doing derivatives of a process that was actually defective. But the problem, of course, is it was random, and I would have success at times, and my account would go up, and then my account would go back down, and I'd give it back. And then I might lose, go in the hole. And I was constantly fighting to bring it back, and with adjustments and tweaks. And what I was really doing was doing a curve fit process. And it didn't matter what tools I was using, because I used more tools because I thought it meant more, would give me more certainty. What it did was the opposite, yet I didn't understand. And early on when I started, there was really very few off-floor traders. Everybody was on the floor, right? So I was kind of an anomaly, and I had nothing. If I wanted to learn to trade, I bought a book, or I paid a horrendous amount of money to go to a seminar. And I can tell you, after all of that, except for one, which was Market Profile, when it first came into the public space back, and I think it was 1985, and it was Peter Stottlemyre actually taught it, who created it. I was very fortunate to be able to, and it was called Market Logic School, and it cost a horrendous amount of that. And then I messed that up, and I'm telling you this because I thought if I put indicators over Market Profile, I'd now have the best of both worlds. And what I ended up doing was having the worst of both worlds. Just a little thing to share. Here's some statistics, and let's get into the market. So today we opened lower inside of yesterday's range. That means we opened just above yesterday's low, right? And obviously we rejected yesterday's high. And you guys were in the stream yesterday. We had upside targets, and we achieved most of those upside targets yesterday. We also saw something that was very noteworthy. At the high of the day, I think 4,000 icebergs went off. And I think we might have been talking about that in the stream. I can't remember. But it was notable because when you get an outsized cluster of icebergs, I mean, there's a few possibilities. That could be the end of it, or we come back and check them, and maybe they are off sides, and that creates a move in the other direction. It was noteworthy. And this morning, we also saw some big iceberg buying at a higher level from now. So just something to talk about. So here's the stats. Grab a pen and paper, write these down, and then we will move along as they say. And if I may have some technical issues here, I've probably having one better. Fine, guys. Solve this. Yeah, I'm kind of stuck here. See if I can do this another. Thanks. All right, I think you guys seeing my screen okay now? You all right here? Uh, get the you see Bookmap on here? Yeah, I'm sorry about that. It's like this weekend I'm going to be doing some electrical. Okay, RTH open. Now, you know we had a big report 7:30 and the market didn't like it and we started the Acapulco cliff dive. Um, so let's look at the RTH open. Still having some trouble here with some of these tools. Let's try to survive. Okay, so this is the RTH open. Let me give you these stats I was mentioning. I'm sorry I got distracted. We're opening lower inside of range. Here's some statistics. And they're just stats. Remember, they don't know that we had the big run up. They don't know everybody on the planet was long, and they don't know there's loads of sell stops under us. So remember, the statistics are just based on where we open relative to yesterday's range. So the overnight volume point of control, which is the highest volume in the ETH, has an 83% probability. The overnight mid has an 83% probability. The previous close, not likely, 72%. And the previous value area low, 71%. There, 71% probability. Um, let's see what else here. I think we're the overnight low 66%, the first hour low, which is called the IB low, that's the IB high. So I'll show you those when we get the overnight low, 66% probability. So I got previous low 53%. They're starting to go down. Okay, and again, no, market doesn't know for anything. It just doesn't know context. These are just statistics. But what I find is if I'm opening here, what do I have? I have the overnight low and I have the value area that are in the range of possibilities. This is how I use statistics, and this is something we concentrate on in the Trader Lab. Now, there's another stat I want to have you write down. The first half hour high or low, there's the 97% probability we will take that out. So that would be 9 a.m. Central Time. The initial balance, high or low, is after the first hour. So that's 9:30 Central Time. So either the first hour high or low, and then at 9 a.m. Central Time, 97% probability we take out the first 30 minutes. Okay, so those are the stats I have that are relevant for this conversation. And there's a couple other pieces. Let me show you a little more like this. I hope you. This is before the day opens. Yesterday's low, remember? We have a stat there. We're looking for that. This is called the naked volume point of control. This was a retail price last time we were down here. And that is from day before yesterday. That was the retail price. Okay, so that's like in a shopping, if you think of and trading, at least for me, price it's about retail. If the highest volume is somewhere and it's too low, the market will go up to find what's too high. And if you remember yesterday, we had a target, seems like a long time ago, and in a galaxy far, far away, we had a target around 57, 45, 57. Okay, so now we're opening down here. That's 20 points. That's pretty big, don't you think? So that target was one of these, but on the other side. So this is a target, and there's one more down below here. This one. This is an intermediate time frame. The market tends to come back to high volume. And why? Because when there's a lot of interaction between buyers and sellers, it's basically an area of acceptance. Think of it like when you go to the store, you know, there's a lot retail price or ish, 5 cents up, 5 cents down. There's a lot of volume because it's a fair price. When you get to outside edges of a fair price, it's either too high or too low. And that's what creates our consolidations also. If it gets too high, it'll come back to retail. And the reason is that if buyers won't pay for it, the sellers lower the price. Get that in your store. If they put it on sale, it doesn't stay there indefinitely because the sellers are going to raise the price back up and you'll be willing to pay it if it comes back to what you perceive as a fair price. This is what creates rotations. Now, the thing about us in our business is it happens in all time frames. So what happens right in here is the same thing that happens in higher time frames. This is just retail in a higher time frame. Now, there's one other location I have, and it's at 40, right in here actually, 45.15 thing chart. Yeah, that's my next target down. It's right. So are you guys with me? I'm going over the numbers because this is about trading levels. This is about attempting, underline, to stay in alignment with what the participants had said about perception of pricing and value. Now, here's the other piece about what makes the market worth what it is. How do they price? They take what they know, the participants, and they auction. Okay, what's too high, what's too low in all time frames. The other piece is if something becomes too high, they have a tendency, the participants would come back and try to find what's too low. Previously, this was too low, and down below was too low in the 20. It's too low, then we can either come back. If we take it out, then we're going to a previous level. That's it. Now you understand how the market works. Now, how you navigate it, topic. So, RTH open. Is everybody with me? By the way, if you're in YouTube, there's about a 10-15 second delay. If you have questions, please post them. And of course, in Discord, Trader Lab, etc., and so much, so forth. I've been very busy this morning, if you can understand, so I wasn't quite there was a lot of opportunity and of course risk. So let's take a look at what we can anticipate. Now, something that you might want to, and write, guys, I hope you take a couple of notes. Even if you've heard what I do for, it's how you might get it to stick in your mind, and we can do that optically by seeing it. We could do it by hearing it, and you can do it by writing it down, taking notes. It's just different inputs. And this is how things stick in your head, because it's multiple inputs. So learning or transfer of knowledge of information, taking a couple notes. You don't have to take a lot of notes. Don't write a book. You can come to Trader Lab and this information is available. But to reinforce it, what I'm going to be doing, I don't use any indicators, and what I'm doing is I'm navigating and narrating. I'm trading a language of the market, and I speak market, and it's not indicator based, it is participant based. So that's what you're going to see here. But the statistics are an important part. So what do I know? I know the market goes up to go down, and I think we can prove that today. But what else does the market do? It goes down to go up. Why is that? Well, everybody is long, pretty much. If you got short in ETH and there were short opportunities in ETH, you'd be holding. If the market opens substantially lower, you might buy and cover. So we call that responsive buying. You would be responding. Now, what you don't know, like everything in life, and especially in trading, is what's going to happen. That's the joy, isn't it? So right here we see the buyer start, and this is the RTH open right here. This is the ETH profile. I won't go much into that, but this is the RTH. This is going to show us all the volume as it comes in and develops. So, and this is going to show us only what's on the chart starting at RTH open. So this is how we start. Now let's see how it plays. In the yellow line here, this is called a developing, still having a problem. A developing volume point of control. This is where our high volume is, and this is what high volume looks like. And remember, shoppers, too high, too low, here, retail. So if you think of how a store works, this is on sale, this is too high, this is retail. If this price is too low, the market can move away and then the volume might shift. Or we just see the same thing. And these measure microstructures or consolidations. I am having some trouble here with mouse. I'm going to try, hopefully I can, and we're not going to have big trouble. So let's watch. Now we're anticipating buying. Now for me, there's no longs, but let's look at how this behaves. So this is too low. This is VPOC migration. This is a structured long in the Trader Lab. However, what is the context? I don't think you want to join the buyers. I think you might want to join the sellers. Call me crazy. Don't call me crazy. But it's the trend, isn't it? This is another element of this. Trading is not mechanical. What it is you need to know before you ever put a trade on what's happening. Is this a long on a 20-point gap or whatever it is, or might it be a short? Where's the stops? Let me think. Where are the stops from the longs from yesterday? They're right under here. Do you want to step in front of this if there's sell stops under here? So the buying is those responders who are taking some profits. Now we don't know, this is the joy, how, it could go anywhere. But here's what I have. This is where statistics come in. I have a level called the value area low from yesterday. So I know there's a level here. So let's look. So this says higher, higher. There's my buyer, my responder, and I have no clue. I'm just looking. My retail price moves up here. What this says, this is now retail. But there's another piece of retail. Have you ever gone to a store and they have a retail price and you go, I'm not paying that because it's too high? Seller, pullback. This is a structured trade in the Trader Lab. We have alignment. Remember, horseshoes and hand grenades. It could do anything. And this now was too low. If I get short here, and let me take you into the, still having trouble here. Sorry. This is microstructure. So this is high volume. Think of this as a micro consolidation. That's what this is. So in this little box right here, you have buyer, seller, buyer, seller, buyer, seller. Inside, and you can see the volume there. This is like retail. I get my buyer. I watch this. It tests. I get another buyer. So right now this is too low. My buyer. Now I get the same behavior here. And I get my seller. So what is this saying? Over here it said too low. Over here it says too high. Now I don't know. It could just, if it breaks that way, I have nothing to do. It breaks the other way. I see the delta. I see the seller. And this is my volume point of control. So I have retail, and this is retail. So think fractal. This is a developing daily time frame. This is the highest volume so far for the day. Now we're in 8 seconds, so This yellow line is very sensitive because it starts at 0 at RTH open. So I see this seller. Notice the difference in the behavior. Buyer, buyer. I'm having a hard time controlling this mouse here, guys, so I'm sorry about that. Keeps biting me. Then seller, change. Back and test. Is this really too high? VPOC migration. This is a short in the Trader Lab. Now, this was too low, and it's the open. So now, and I have a statistic down here. This is what I'm going to be looking for. So let's see how it behaves. So, too high, I'm going to label it. Just watch. It's a process, guys. If you've been following the stream, and the reason I'm doing this, I'm just tracking the change in what the perception of value is, or fair price, think retail, of the participants. Remember, it's not up to me, and it's not even up to you. It is up to us, though, to try to find a way to stay in real time. Here is the volume here. So, too high, I'm not paying that. Seller, out of here. Now here, this shifts down. I'm not paying that. Test. We're out of here. We pull back. Watch. I'm just going to track along. I have no clue. I'm the clueless one. And by the way, it's pretty important in trading to know you don't know. Not to think you know. It's our job. Really, we can't know. This, what was that? What did we say? Too high. Potential short right there in the Trader Lab. See what happens. Structured trade, guys. By the way, the Trader Lab, what I do, I share structured trades that you can reverse engineer. The thing that is most difficult is to know, should you be getting long here, or should you only be taking shorts? What information told us shorts only? Too high, too high. Whoop, sorry, again, I can't control this thing well. Too high, there's the test. I'm not paying that. I'm leaving that store. How about here? Nah. How about this volume here? Nah, I'm not paying that. Let's go back and check. Nah, not paying that. Seller. Let's check this structure here. What about this one? Nope. You're out. I'm out of here. I'll see you later. All these are Trader Lab structured shorts. It's all up to you to vet and understand market mechanics, and that's what this stream is about. How does the market work? Why does it do what it does? And it's all random. Look where we come back. Let's look. Now I don't remember what happened. Although I know is I was not on the long side. Watch. What did we do? Do you see something familiar? That was too high. This is a short. This is a short. These are all shorts, subject to your risk and vetting. Too high. It's a short. What is this? Break. Moves down. Break. What's that? A short. Everybody see them. Just want to know if you're with me. By the way, there is a target. I forgot all about that. So this is a scale or whatever you're. Are you guys tracking? Okay, so it's short, 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 short. Now, let's look. Now this one, let's look here. I'm going to take you now into profile world. Let me try to explain. Now, I'd love to go into real time. I don't know if that does us any good, because if you don't understand, and this is kind of a dilemma, because I could sit here and narrate, but if I don't have a structured trade, you're just going to see rotations. And I certainly don't encourage anyone just to try to scalp. I use what starts out, every trade I put on kind of starts out like a scalp, because when you put a trade on, you're in a really small time frame, subject to how you enter the market. So is that a scalp? No, it's a trigger. Different. And then it's the alignment that what this is all about. It's not the fact that you get this little thing here, which is actually a selling structure. It's in the middle of nowhere. See it? Selling structure, test, selling. And what do you get here? You get this. Where does it come back? To the volume. We could do this all day. Now, what good does that do you? See, it doesn't do you any good. Because if you can't understand this and what's going on in here, then you don't have a way to interact. You're just going to throw yourself under a bus here. This is too high, right? I should be marking the sleep. See, I got to tell you, multitasking. Wow. I have a rebellious, actually, it's a trackball, and I've been having some trouble, and I just have to work. So I apologize if things are quirky and jerky. This is too high. So here's what I know. So this shifts down. This is saying too high, okay? I also know. So if I get short, show you. So this is where I would like it, like everything, to come and check because it's too high. If I come back here, I want to sell, and that's just a structured trade. But let me show you another piece. You'll notice high volume is here. This is retail, right? And we fell out of it. We take out yesterday's low. That's another target. And don't forget, this is a target. We come back outside. This is called the low volume node. And what it is an outside edge of what we might think of as a consolidation or a distribution. When the market comes outside, what it's really saying is, this was too high. We're out of here. Now we're in this range. This is a consolidation. The outside edge of consolidations has stops. If we pop up into here and and these are usually at swings, these low volume areas. I'm having trouble here. We can pop into them and then revert back to the high volume, back around. And don't forget, that's our target. Okay, one of them. So, and what do we have at the mid and the VWAP? We always have stops. So where do we come? So I'm looking at this and I'm looking at the outside edge. Now, the fact that this is an outside edge tells me to be careful. And the concept here is, now we're in a downtrend. Can we all agree it's going down? Yes. If we think it's going south of the border, then what might we do? If we know this is a non-auctioned area because we ripped through it on the way down, it's an outside edge, which means there's swings here. So we can come up into this. What was too high? This. And we don't know. This is trading, right? Who knows? When I come up, now here's the stop and iceberg detector. I see 100, I see stops coming out. Okay. And I'm looking for this or somewhere up in here. And I couldn't tell you where, not my job, which I did. So here, right, let's look at this. I'm seeing icebergs. Okay, that's lovely. And here, these are buy stops. We're coming up. The green bubbles are delta. Buy stops become market orders. So let's look at what's going on. 72 buy stops. 16. I'm going higher and I'm seeing less buy stops. Now, I use the stop and iceberg detector. One of the things I like, and it's the only thing I use from from indicator day, is divergence. Because what does divergence tell us? It could tell us that we're running out of something. So price, if we're going up on stops, and of course, I'm sure buyers too, but if we're going up on a counter rotation, and I'm now into what I perceive to be the area where the stops will be. So put the pieces together. I'm under this, and I'm looking for the check. But two pieces, outside edge, so stops, and then this was too high. So I have a location and overnight low. So we got all kinds of stuff here, right? 16. Now here's all the pieces. So right here, I'm looking for a trigger. So let's look. Let's go back. Remember? Now, how about this? There's my seller, but I get my buyer. But where's my location? I don't have one. You see? What about here? Is this too high? It's too low. There's my buyer. Hmm. Okay. But where am I? I'm out here. You see, there's pieces. It's conditional. Here's my volume. There's my buyer looking good. I'm looking for this. I'm thinking this is great. I'm going to get a short. There's my volume. Now there's my seller. Now here's my volume. It's too high. Now, oh no, just do this. Back to here, microstructure, push up. Right? What does it do? Breaks down. You see the difference in behavior? There's my buyer. There's my buyer. Little buyers, little buyers. There's my buyer. Here's my seller. Change. Here's a pullback. Where was it too high? Here. Short. Where does it come? Here. Now this is a problem right here. Right here, I want it to push off. It shifts down. It goes the other way. This is now, it's still too high, but this might be too low at the moment. So let's watch and see if you can see the beat. Where do we come? Back here. Do we tag it? Nope. This is trading. No precision. So if you took a short in here, your job is to get risk neutral. When you see this, and we do this, it puts all this in jeopardy and it puts this back on the table. So this was too high. Your stop would be here and you would scale. You would have a stop above this volume, which was too high. Remember, shopping. Now, what is it? When this shifts down, we're looking for this. Same as what I was showing you here. We're looking for the retracement and the push off. Here, higher time frame drops down. I'm looking for the push off. I get it. And I think at this point, this trade's, I'm going to scratch the trade and I'm going to look for it up here. So that's what's going on. Okay. Now that's the location. Now remember, horseshoes and hand grenade. Now there's a couple things you could do with this. When you see this, there's a few possibilities. I'm going to give you them. And this is just possibilities. This is where a trade plan. This was too high. There's my buyer, not happy. There's my microstructure. It's against this volume. I see my seller. I pull back to this volume. It's a potential short. Now I'm showing, now it's not because of range. I'm showing you structured trades. In a trade plan, so you understand, it has to fit things called risk-reward ratio, you know, all that, because this is the mean, and this is called mean reversion. What it is, it's outside in trading. This is the mean. This was the mean that was too high, so no longer. We can come back and check this. We might only come back and check this, and this is the target for mean reversion for a scale. Then either it continues or it will come here and reject it and come back here, and right? Is everybody seeing the logic of following and translating market behavior? This is really important. I want to pause and see if you have questions. So nobody knows what's going to happen, right? I certainly don't. So I gave up many years ago on trying to predict anything. I found that for me, at least, the better thing to do is just try to stay in alignment and anticipate. Uh, we have a saying now in the Trader Lab. It's kind of recent, but you got to anticipate to participate. There's no making it up. It's like if this happens, and it's conditional. If this is retail, then that. If not, then what? Then back here. Really having trouble, guys. Sorry. So this is too high. So let's look at this. So if we know this is too high, the trade fails above here. Okay. So what I do, I would look at this so you know what I do. It's not a recommendation. You can put your stop wherever you want. The way you figure that out is you got to do metrics. You may find that having a stop a point above here is better than having a stop right there. That's up to you. Okay. But here's what I know. I know if I get taken out of this trade, my stop's going to be above here. Why? It was too high. And I know the market can come back and check it and then bounce off it. Notice how we bounced off of this one, right? Here. Now here's what I see here. So I'm assuming, and by the way, I go through this mentally. I go, this trade's going to fail. You guys do that? I go, this thing, I'm going to take it out. I'm already planning my next trade because it's going to fail. However, and in the past, because I was so smart, I would hit the eject button. Where would I get out? Maybe here, fear of loss, or right here. It'd be me. I'd be buying this high of this swing, and then it does this. You guys ever done that? You know why it happens? Because you don't know your statistics. The statistics in a random environment give you the courage to just do consistent process, because that's the only way you can know what might happen over a large sample size. Making it up as you go is not a recipe necessarily for success. It's called gambling. Well, right here, so I know this was too low. So if I'm short, I can actually use this structure here to take another short, because I see this and I have to scale here, and then I'm still going for targets. VPOC migration, too high. Let's mark that. I'm getting very trackball. Hard time. I'm going to have to do some work. Try to get. So too high. Now we have another Trader Lab structured trade. If this is too high, this is now retail. I push off. This would be my next area looking for a short because it's too high. This now is retail. What that means, it's the highest volume. It's right at yesterday's low. So what might happen? This is now our outside edge. Remember, we were looking for, so high volume here, too high. If I'm trying to get short, I have this, and I have this area up in here. And then I have this area down here as the other side. Then I have this volume down here. So let's just watch the behavior. If I pop, doesn't get back here, and then I get my break low. Let's watch. This was too high. This is retail. Let's look. Right here, now I don't know, like everybody else. I'm as clueless as everybody. Trust me. This is too high. I come up here. I don't take this out. Now, if it came up here, I'd like it even better because I have more range. What happens? We come up, and by the way, the rotations and the volatility have increased. So you have to look at levels are only a level. So normally, if that's the right term, this is too high. I'd be looking for a pullback here and a short. I don't get it though. Now, if I got short, so you understand, I've got to be out here because this was too high. But here's what happens. It comes up here. I'm clueless. I see my seller and I'm going, okay, we're going to bounce off of here. You guys ever think that? And what do I see? I see my seller here. So this is too high, and now this is too high. It gives me another opportunity for a short. And I forgot one thing, but 9 a.m. Remember, I said 9 a.m. Nobody's reminding me that the first at 9 a.m. from 8:30 to 9 a.m. After 9 a.m. there's a 97% probability we're going to take this out right here. That happens at 9 a.m. So if I'm taking shorts, because I play statistics, I'm going this. Then I have more, and then I have this, and this, among other things. So let's watch. So when I'm taking a short, which I mean, and I apologize, there's just a lot on here, and this thing is giving me time, is I'm looking for shorts get under here, right? And also at 9 a.m., we have the UOM pre, which is a big number. So I know that. So what might we get in front of a report? Does the word short covering come to mind? And then if I come up here, right, I get my opportunity to get short again. Now I have a 97% stat here for a short. And once I get it, which is here, then I'm going for this. And then I have, I think it was 10 or 15 down. You guys with me so far? Now, let's watch. This is too high. So let's watch what happens. Oh, wait a minute. Too high. I pull back. 9:30, the initial balance comes in. Remember? The initial balance, give you the stat. I wish I could catch up, but between everything else that's going on, there's about a 60% probability past performance not indicative of future results. Now, the thing about the initial balance is we're going down. If it had a 5% probability, I'd still be going for it because it's what are the priority of inputs that you base what you do on? How about the condition of the market? That's called context. So this is my next target. This has a high probability. So you guys know, let me give you this. There's a 97, almost a 98% probability we'll either take out the first hour high or low. Now, individually, it's not huge on its own. It's 59% we're going to take this out. But in the overall picture, we're going to either take out the first hour high or low, 98% probability. So the fact that we're doing the Acapulco cliff dive over here, I'm working a 98% probability that we're going to take this out and then continue. Wow. Then I have another target down here, which was, let me tell you exactly what it was, around 15. Then for me, so down here, here. And that was it for me. That's kind of where I packed up the suitcase. Are, right? Yeah, there we are. So that was it. Now I'm done. And now I'm with you guys. So, but this is where, because I have targets. Now, I apologize for the problems I'm having here. I'm having a real hard time controlling this thing. Let me just see if I can do anything about it. We doing all right, guys? I apologize. I'm still having big trouble in River City, as they say. So I will sort it out. I don't have really much control of this now. You can see. Let me see what we can do. Let's try to. I'm going to try to get into real-time narration now. If these are not trade recommendations, I'm going to tell you. For me, pretty much have hit my targets. This is a key target. This is a key target, and I think it was 10 or what. So this is it. So now what do? I'm going to tell you what I do, and it's not a recommendation. Um, there's a few ways you could look at it. You could order lunch, and you could say, I'm done for the day. Or, here's the or, you know this, we have structured trades in the Trader Lab. One of them is out here. Remember, low volume. And here, you might as well get a little lesson in auction market theory. You notice when we come out of a consolidation, the market rips. That's what creates low volume. You can just see it over here. You can see it on either side of the screen. When it rips like that, it hasn't auctioned. So the market has a tendency to come back up into these areas. And what can happen is, and it doesn't have to do it, this is the joy of trading, it can come up in here, pop into this area, and then mean revert and come back. Remember, if this is the retail price in this, there's got to be a better way to do this. Maybe not. If this is the retail price here, if we come out, remember shopping, this is the current retail price down at that high volume level. If we come out here, we have a structured trade in the Trader Lab. We have two locations here. This is called potentially the IB continuation trade. So if we come up in this low volume area and into this, then potentially, and this is not a trade recommendation because I can't call trades, because I don't want you taking a trade that is only 50-50. If it was better than that, then you would know it because you know the stats. So, but for me, there's no long. What there is shorts in the market and buy stops. So I'm looking at the sellers that are in this leg, and I know where their stops might be. It's going to be up in here where this low volume area is. I have liquidity sitting in the book. So what I'm going to be looking for is an outside edge, and this is called the IB continuation. And the market could care less about our structured trades. So we can look at this and go, where is a trigger? Well, this right here, guys, is not a strong high. This is weak right here. This is flat. So there's no excess. So now if it goes to, the S&P goes to 0 and I don't have a structured trade or a trigger, it's okay with me. It's not my trade. If you feel you need to impulse, like for example, this heads down here and you sell it, that's FOMO. That is not a recipe for longevity. That's what gamblers. You need to take your experience. We've all done, believe me, whatever you've done, I just had more time to do it than you. That's all. But you need to learn, because in many ways, those errors that we make because we're triggered emotionally are basically, those are emotional triggers. They have nothing to do with the business of trading. See, it's all triggering, So you need to really learn about the things that impact you. It's fight or flight, fear of loss. It's if you're down and you're in the hole, you're going to be looking for trades. You're in the back of your head, which is not that far away from your consciousness. You want to make it back. I don't want to be a loser. I need to be a winner. I want approval. All those things. Market could care less about what you need, in my opinion, is a statistical edge and the discipline to just engage in the market when your edge shows up. That's how you stay in this business. Anything else you're doing is you're just sitting with the gamblers. And we know retail traders basically are just playing a random game with random inputs. And that's what we focus on in the Trader Lab, is understanding the market is random, and the process you deploy needs to not be random. You can't measure random inputs, because if that's random and the market's random, there's nothing but chaos. And I cover this in my primer webinar that I suggest everybody take a watch. It's about an hour, I think, so, and hour 17 minutes. It's got over 20,000 views in YouTube, and it's available to everybody. The Bookmap Discord Trader Lab chat. It's an overview of this process understanding market mechanics, but also the business of trade. It's more important, I think. Uh, you can learn to trade, in my opinion, but you need to maybe reframe how you see trading or you experience it. Because I know when I started in the business, I had no clue. I thought it was indicators were just coming into the retail space when I started trading. It's like thing. Wells Wilder, you probably read about him, and RSI and all this great stuff, ADX, um, and oscillators were just kind of coming in, so all of that. So I thought that's what it was. Oh, and not so much. But I kept thinking it was multiple time frames, right amount of indicators, the right tuning, all this stuff. So I did that. I'm sure you guys either have done it or still doing it. But what I kept finding was I was actually just curve fitting, and I had a random process because there was not a consistent application of all inputs. And then to solve that, I went to trading system design and I built systems because I thought now I can integrate all these multiple inputs and then basically tweak them, and that basically is a very fancy way to create more inputs and more fit. So I kept waking up with Trader Groundhog. Now this is still a weak high to me. And it doesn't matter if this consolidation, you see how it's going up, certainly break and accelerate. And it might do that. This to me is weak. So I have nothing to do. Sit and watch. Because for me, so anyway, I found out after unfortunately a lot of brain damage that that process was effective. And no matter how hard I tried to overcome the problems with it, I didn't understand it was a defective process. My effort to make it work had nothing to do with the reality of how the market worked. So that my effort meant nothing because my process was defective. So I found out, unfortunately, over years, that I kept waking up. How many times did you have you had the aha moment? I've had so many I can't remember. And you wake up and you see it's Trader Groundhog Day. You end up in the same place. That's what happened to me. So, and a slow learner. And again, I had no information. You guys are fortunate in some way. You have the internet, you have YouTube, you have all kinds of stuff out there. Now, the downside to what you guys have is you got so much input. You're going to be running potentially to all these different ideas and trying them out and mixing them in, and you're basically replicating what I did. You're just doing it with different inputs, different ideas, different talking heads, and all that. And that's why the reality of trading is you have to find what resonates with you. Now, for me, it's no indicators. It's just this. I know what this is. I also know this is not strong. And I have a structured trade, but it needs to be out here. And if it doesn't get here and it just falls out, it's not my trade. Because in the past, I'd look at this and say, oh, I got to figure out a way that I can be short. I mean, if it goes down 20 points, you're going to go, gee, I wish I was short. What I wish is I don't take trades that don't fit my plan because there's thousands of trades in a career. Random trading is just gambling. So for me, I want to leave gambling to somebody else. There's enough randomness in the behavior of the market. Why would I take a trade here, even though I can see it might rotate down and the optimum or better location, there's no optimum, is up in here. So maybe we'll get to see what while we're hanging out. Do you have any questions while we're tooling? I'm getting a question from the Bookmap Discord Trader Lab chat. How do I know it's a weak high? You see this down here, the rejection. That is, and now the pullback and test. of this volume here, that is a reversal structure in the Trader Lab. This here has flat tops. Now we can do, obviously it can do anything. What makes it weak is there's no excess and test. This to me, if I look at this, it might fit. And what I'm seeing here is, all I got here is this structure. So there's my test. It's my seller, seller, seller. We can keep going down. Seller. But what makes it weak is this high. It's just because what do retail traders do? They put their stops here. So I anticipate if I want to get short, I don't want to join other traders. How many times, and again, I don't know what it'll do. So it's not about anything more than knowing typical retail trader behavior. Write this down, guys. Think like a retail trader. Don't act like one. If you were short, where would your stop be? Would you be putting it there, 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 there? Maybe. Now, it doesn't have to come here. This is the beauty of trading. Who knows? Like random. But is this a strong structure? Or do you think the market, if it can't go down and all these shorts, we're still in from this leg, right? And remember, this is the buying structure here. And it doesn't mean get long. It does mean get out of Dodge if you have a trade plan for it. This told me this level, let me show it to you, right there. Remember, shopping is too low at the moment. Low of the day. Oh, too low. Here's the volume. Try to this thing. It's too low. So down, down, volume. Going lower, Lewis. Too high. Break high. Test. Buyer. Uh-oh. What do? Come back. This is a triggering structure. Now, if you're picking a low of the day, good luck with that. I don't do that. Why? I don't know where it is. But I do use these for trade management or get out. As soon as it doesn't get below this microstructure, this volume, right, and you could see it right there, that is like a store with a price. And this is too high, this is too low. This is retail in that consolidation right there. And if it's too low, then what do? Go the other way. Now, where to? Well, where was it too high? Well, out here is where we fell out of this. This is a consolidation. What's on the other side of consolidations? Stops. That's what makes it rip. What's on the other side of this consolidation? Stops. So I know that. That's why I don't have a short. And that's why this is a weak high. So anyway, right? So let's watch this structure. And this is, when I talk about this, what I do, this is language. So if I don't use indicators, how do I stay close to the market without using backwards looking, conflicting indicators? I just look at this. I don't have to do anything more. Now, this is a foreign language, I understand. And if you want to be fluent, let's say in playing a musical instrument or speaking a foreign language, it takes intentional practice, replays, the whole thing. Screenshots, and also in the Trader Lab, this is what we do. This is why the Trader Lab exists, to help traders who've gone down. We've all done the same thing. Nobody here that has the magic 8 ball except me, and it doesn't work. And the other part of it is we all go do the same things. Think about it. Why is the outcome for retail traders dismal as far as their ability to sustain themselves in a career in trading? It's because they all do the same thing or derivatives of a process. If you talk to professional traders, I can tell you most of them are not doing what we do. And there's a book by Tom Hoagland, I think it is. It's called The Best Loser Wins. This guy was on a bank desk. And basically, and I've talked obviously over the years, not only have I known many big traders, quants, hedge fund operators, floor traders, all this. their perspective as far as what retail traders do, I think if you kind of looked into it, you might decide you don't want to do what everybody else does. So it's think like a retail trader, don't act like one. If we know there's stops sitting here, and it doesn't mean it's ever going to get there, do you want to join them? I can tell you for me, if it doesn't come outside and pick these guys off, I just have nothing. And here's the other piece. It could go down to zero. Not a recommendation. And if I'm not on it, it's not my trade. My trade is out here if it happens. And if it doesn't happen, it doesn't matter. See? And that might be hard for us because we might be thinking we have a video game play and that somehow we have an ATM in the basement and it's just going to spit cash out every day. Gamblers that go to the casino walk out with cash, but they don't keep it if they kept coming back to the casino. At some point, over time, because of the statistics, they will give some or all of it or whatever back. It's all random. We're in the same business, guys. So if you think like a retail trader, you're going to have stops sitting here. And if you have your stops here, if the market doesn't go down, and remember why, we had our buyers. What did we get here? Volume. What did we get here? Our buyer. What do we have here? Our seller. What are we doing? We're not making lower lows. Where's our stops? Here. This is why I can't sell this. And the reason is, and it's not because I know what'll happen. I know retail trader behavior, and I've paid enough dues and tuition, and I've repeated the course so many times. Imagine that you had to go back and you're in a university or whatever, and you had to pay tuition. How many times have you taken the same class over and paid for it again? Do you think if you're getting the same outcome that maybe you might want to not repeat class because we pay? So in the Trader Lab, it's about understanding market mechanics, understanding that maybe, and I always say maybe, this is not a good place to be short, understanding retail trader behavior, and understanding why you would not get short here. And again, the market could go to zero. But what is the better opportunity? Might it be squeeze into this? Stops are going to be in this area, and I say area, and I have no clue. And this is poorly auctioned, remember, right? I'm taking you back to now this is why I don't do real-time narration, guys. I might sit here, it might be, waiting for a bottle, for wine to ferment, we might be here. So that's why I don't do real-time narration. I would love to do it. But in the Trader Lab, I did do 4-hour live narrations, trend days that shift from directional into rotational, like this. This is a trend. We're going down. What is the condition in this right now? It's rotational. How do you trade a trend? Well, do you sell this or do you wait for this? And then look for exhaustion for a rotation in alignment. Now, I have to be conscious that the low of the day might be in. I don't know. I can't, since I don't know, I have nothing to do. So let's watch our behavior up here. Now, what else do we know? This is poorly auctioned, so stops, VWAP and mid, stops. Let me just scrunch this up a little. Retail, too high. So these are areas, all this here are areas for potential interaction, short. So let's observe, and this is not a trade calling room. This is not a recommendation. Everybody takes stops. Doing this, I've just had more opportunity to take stops than you because I've been doing this for 43 years. So there. Hope you guys are enjoying this and get something out of it. So this is hard. What's hard about this, it's called mean reversion. And what it is called outside in trading. And ah, thank goodness I'm not trading with this thing. Can you imagine trying to click and move your orders around with something that does this? I'm trying to get I'm trying to just get over here to this part of the I wish I knew what the problem. Anyway, I'm having a problem here controlling it. You kind of know what's going on. Hold on, guys. I'm going to try something else here. I can't take this anymore. Uh, I'm going to switch a couple things around. Hopefully, things don't get. Let me just see if I can do. Um, let's just try to watch this, okay? Again, I apologize for the technical difficulty. I had problems with my audio, which I think I fixed, and of course, something else goes out in the left field. This is life in the fast lane. So this is an area now, and again, the reason now I already explained why. So, but the market doesn't care. Here's what I know. I know this was my targeting coming down. I know I have this down here. I know the low was too low because I have a buying structure. And of course, we don't know anything until we know in hindsight, but that was a buying trigger off the low of the day, which at least might get you if you're using it as a trade management process. Okay. Out in here is where the trade might show up, and we have to be conscious of VWAP, mid, and VPOC. So this is all possible. I have liquidity here, and it's in alignment. And so let's just observe the. So 133 stops. I have sell icebergs going off. I have liquidity sitting in the book 251. Location, 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 and again location. So I'm stalking potentially structured trade, and I don't know anything. I'm not going to call the trade. I'm just going to let you watch. I think I've given you enough information, and I don't want anybody to get. Because remember, the outcome of any trade is random. Now, let's just watch. Now, there's a few ways to think about it. It can still do anything. So here's buy stops, selling icebergs, microstructure, seller. This high volume right here is something to. What do you guys think? Can you see it? So let's look over here. This was too low. The scale has to be ahead of this. Why? The buyers came for it. This is microstructure. So let's go back over here, you know. So this was too low. This was too low, higher. Now this, right, it could have been, this looks like the trigger, doesn't it? But it doesn't have location. This out here, remember, this is the actual structured trade, and the market never has to get there. So this is really a matter of trade plan. Now, here's what I know. I know this is too low. If I get short, I have to scale. And I use these little structures. Now, it's fractal. So if I'm taking the short, here's my mic. Here's the way that I think about this. There's my seller. So seller, seller. This is too high, right? On there. See it? That's your test. Then you put your helmet on, and down here was too low. Let's just see what it. Now, what you might find, and this is now the thing about that I'm showing you, it works in all fractals and time frames. These are called fractals. So this little microstructure, I understand what it says. See, this is where language comes from. What is it saying? And here's the other piece, most important part. What's the trend? Down. And what is this called when we come outside? It is a plan inside a plan. So for me, there's no longs. Now, I'm not saying you couldn't take a long, but I'm going to suggest, at least, no, I'm not going to suggest anything, right? For me, I think I want to be short because I think anybody, so who's the buyers? Do we really want to be long, or do we want to use counter rotations, which are really shorts being squeezed at the moment, and look at locations, which is outside, to get short? And that context is called mean reversion. That's outside in trading. So this is context in context. So that was your short. And you could see how it worked, right? I don't call trades because I don't really want you guys to hurt yourselves. I do want you guys, and the reason the Trader Lab exists is for you to understand market mechanics. And there's no right way to trade, but we certainly know there's a lot of ways that don't work. Huh? We can all talk about that. I think we could spend a couple years talking about all the things we've done. I know I can. But I also now can read language and translate. This is too high. This is retail. There's my seller. Now, here's my test. This is a short. Now I can sell it, you know, I'm a little more skilled at this, so I can sell it. By the way, where was my scale? If I can move this thing, it was right here. So if I get short here, I'm going to get risk neutral. So it's about 2 points. And then I'm going to hold. And where's my next area where it was too low? Well, don't forget, it was here. Then it's here, right ahead of that high volume, I think. This is another area. So I have to scale here. And then it's either going to continue low, whatever it's going to do. Now it's just random. I have no clue. See, my job is I can't know. What I know is what has happened at these locations. So if I put a trade on, now this is called VPOC migration. This is the retail price. Now, two possibilities. We push off, or if we get above it, then we can rotate back up. Hard for me to. This is now too high in a market because it's a level we can return to check. Remember, stoppers. And it's above the mid and the V. So in theory, if we got through the mid and the V up, we can go back there. I know this. Now I don't know if it ever will. Not my job to know. I can't. So now we want to see what happens here. Now remember the structured trade. Now there's two trades at work here. Outside in, mean, which is the short I was just sharing with. Not a trade recommendation. Then there's out here and back to here. So no matter what happens, this is going to be a target, unless of course we just blow through the mid V up, and because here's the locations. Wow. Out here, out here, out here, out here, out here. It's a big range, but mostly it's out in here. So what I'm hoping, if I'm short, first of all, if it comes out over here, I'm going to scratch the trade. That's the first thing. That's why the scale is to get me risk neutral. And if it takes me out, I'm okay with that. I have to be because I have no. So I know this was too high, but this is saying maybe this is too low, and we're going to again rotate out. Mean reversion is coming back to high volume in time frames and fractals. So the high volume microstructure was here. There's your, so I have to get scaled. Now, if it holds this, we continue. If it takes it out, all I'm going to do is reposition as long because the context is down. Now, have we put the low of the day in? I have no idea. Now, I have hit all my targets. So, and as I mentioned to you, I would be fine being done today. But what's my next potential trade? It's out this outside edge somewhere. Can't move trackball. So it's out here. Now, if this one doesn't work, it's just one. Let's watch. That'd be a better way to do this with this trackball. I'm getting frisky. Let's see if I can. Let's see. Guys, trying to fix something here. Apologies. How we doing? Am I still with you? Can I get a check or sound screen check in YouTube and everywhere else? How am I doing in YouTube? Am I still live here? Yeah, okay, great. Thanks, Joe. All right, thanks. Oh, that's reassuring. At least the plane hasn't crashed yet. Thanks. All right, so we're back, theoretically. I've made some switching here. Seems like it's better. I've got more control. So out here, if we take this out, which we can because there's stops here, we can come further out. In mean reversion, the hard part with it, now this is the area that's an issue here because we're above this. So it means we can squeeze further. So I anticipate this is going to go. Okay. And I'm okay with that because the trade actually is, remember, this is an area. And the hard part with mean reversion, which is what this is, it's a structure, is the trade can be here, here. So we have, here's a couple structured trades, just because I'm going to run out of time here. In here, here, and this is called VWAP or mid to VPOC. If this is sitting here, another Trader Lab structured trade is going to be up here, back to here. You're in the Trader Lab, and there's 60 PDFs you can download. You can look at these ideas and think about them. And then one by one, meticulously reverse engineer them and make them your own. I share all this stuff with you because when I started trading, there was no information. So, I mean, you could probably cut a lot of time off your development if you're willing to put the work in. And in the Trader Lab, it's basically it's a community of like-minded traders looking to leverage their collective experience. Deborah, not be stopped out of this trade. See, there's no way to know. Now, here's high volume. You see it here? That's created by this and this. See the test? So if you took this short, I think you're asking me, why would I get out? Well, I wouldn't get out, Deborah. I'd get taken out or no. So this was our short. We had our scale, risk neutral. Stop goes above here or wherever, you know, and you have to be willing to say, I don't know. That's what I say. And I use the term clueless because I truly am. If you accept we're in a random environment and it's like a coin toss, just like the casinos, it's a coin toss for them, except they have an edge. So any one trade is 50-50, but over a large sample size, you have an edge, assuming you understand how to extract an edge and then have actually the disciplined trade shows up like this, and take stops like the rest of us, or get scales and get scratched like some of us, and have the discipline not to bail out right here. Have any of you done that? Yeah. And now what? Too high. There's my seller. So this was our short. Seller, test, scale, stop, real time, come back, who knows, seller, too high, south of the border. That's, I guess, real time narrative. And remember, who are you guys tracking? You get something out of this today? There is no longs in a downtrend. I mean, if somebody wants to get long, do you think somebody would be happy to sell you their contract? Do you think if there's a long, what it is a counter rotation? If we are trading in a trending market, which is, I think we'll agree, going down, and who knows, right? I mean, maybe it's the low of the day's in. It doesn't matter. It's not my job. I won't know the low of the day until the end of it. Um, so what I want to do is see the context of the market is now rotational in this area. That's what this is. Everybody did the Acapulco cliff dive. Structurally, we're below this level, which is a key level in a higher or intermediate time frame. I'm below this level. If I now I can come out of remember, these are just areas. This is my outside edge. And if you watch my webinar, I have webinars in there, trend, you know, trading a trending market, that kind of stuff. 4 hours long. You're going to see the same. What I do is very consistent. The market is random. I need to be consistent. So in this configuration, when I see a long, it's not a long. It is telling me counter rotation. And I use that information to either cover my short, which is what this is, and to look for the rotation outside to get short for the continuation down back towards retail, and maybe out here and maybe a new low. I don't know. So right here, if I can stay below this, I can push off. We'll see if it does that. If I come back up here, now they're going to get squeezed because it's two-sided trading. But no, there's no longs. And somebody else, might get long and market goes and it's all great. But I can't pick a bottom, and I certainly I'm not going to get long, and I have to say it's not a trade recommendation. Getting long down here might be the ultimate trade. But if you want to be in the business of trading, it's about getting aligned. It's not about trying to pick a bottom or a top. I don't know where that's going to be. I do know, I will know in hindsight. So along the way, I have to follow where the where the energy is, and everybody who is long got splattered. We might be done with that. I don't know. So for me, outside in, this is the mean. If I come outside, I'm trading back towards this. If I come out here, I'm trading back towards this. If I come out here, I'm trading back towards this. The further it comes out, unless it blows through all of this stuff, and we could come back and check yesterday's low. We could do anything, trade. So for me, the further it comes out, this is my target. That's called mean reversion. So when this happened here and here, these are shorts, but I only have this range. Now the next trade, not a recommendation, if it pulls back here, and this is in the trader lab, it's there's a possibility this is all it's going to do, and we push off. If we push through, then these guys, this volume, which is right there, is on the hook. If I break below this and I can't get back, then we're going to accelerate down. That's another potential opportunity to observe. So let's see what it, not a recommendation. Why? This microstructure, this might be too low. So in a fractal, that's what created this. In the fractal, this is too high. That created that. In the daily time frame, this yellow line is the highest volume for the day. This is now retail. So in the going down and thinking like a Russian doll, little doll, too high. There's my seller. Little doll, too low. There's my buyer. Bigger doll, developing time frame, retail, Trader Lab short or not. Not a trade recommendation. Can you see the behavior? And this is what fractals are. So for me, I'm just reading participant behavior. I can activate here. I can get short here. I can get scaled there. And of course, take a full stop here with all of you. I do all the time. It's not my most pleasant experience, but you know what? It's overhead and cost of production. When somebody walks out of the casino with a suitcase of cash, call it 100,000, all the casino does is go, oh, overhead, cost of production. By the way, did you enjoy the cocktails? And here's a ticket to the buffet. Overhead and cost of production. That's what trading is. I hope you're getting something out of this. Hope you're finding this useful. This is the Trader Lab, guys. And by the way, if you're interested in what we do in the Trader Lab, I invite all of you to visit the Bookmap Discord Trader Lab chat. If you're in YouTube, there's a link down below. You don't have to be a Bookmap subscriber. You'll never be solicited. I'm not a vendor. There's no trading course. But the Trader Lab is a community of like-minded traders with all kinds of experience and many different approaches. We come together to leverage our collective experience to do better. We've all done the same things you've done. And you know, trading is a very isolated experience. You might be surprised how many traders are doing or have done what you are currently doing. I will tell you that I don't do what most traders do. And the only reason is I've tried the other stuff and not so much, if you know what I'm saying. There's 60 PDFs you can download if you're interested in looking at these structured trades and reverse engineer. And if I get asked a lot of times, what's the right way to trade? And the answer is kind of simple, really. It's the way that you can become consistent and derive statistics. Only trade the trades that you have shown and demonstrated that have a statistical edge. This is the kind of stuff, and I threw these together not intentionally for the Trader Lab. The Trader Lab didn't exist. I did these along like 2021, 2020, you know, and it was just stuff I posted. And a lot of traders, you know, were saying, because I was just putting it in the chat, you should try typing this stuff. And then, can you show me a picture? And I said, well, here. And plus, I worked with the developers at Bookmap early on, still do. As far as ideas I had, and they created some custom stuff for me that I, you know, to measure order flow and other elements that I was interested in. So there's some of that going on in here too. So there's a bunch of stuff, and you guys are welcome to these, but this is not mechanical. The thing that is so difficult for us as traders, I think, is to think that it's a red light, green light thing, and we try to get that out of our indicators. This crosses this, you do that. You know, well, for me, that never worked, and I proved that to myself with trading systems, because you're really in a system, you're really trying to create the same thing, you know, and unfortunately, for me, I just kept waking up in the same place with curve fit. So it's our nature to look for certainty, and our nature is to load more on top of things with the idea, since we're risk adverse. Remember, we're wired to run from the saber-toothed tiger, and our mind doesn't know that we're intentionally stepping in front of risk. Just does the same thing. So that's why I decided, and Bookmap asked me if I would mind doing the Trader Lab. And I said, yeah, sure, because I wish somebody had talked to me when I started trading. And nobody did because there was nobody to talk to. Now, you guys kind of have a different problem. You have so much information. The one indicator is all you need. This makes over blah, blah percent return. It's all nonsense because it's not real. It's fantasy. It's one way to get a lot of hits on your YouTube channel or your whatever. You know what I'm talking. So that's not the real world, guys. The Trader Lab is built on a community of traders just like you, and there's not a right way to trade. The answer always is the same. Can you measure it? Is it consistent? You need a process, in my opinion, that's conditional. The trend is down. What is the behavior? The market gets directional and then it gets rotational inside of a directional context. It's called mean reversion. And the shorts that I shared with you, which are not trade recommendations, are an example of how you might develop an understanding of how the market works and then vet structured trades or setups, as you call it, and understand where it has an edge. There are times the same trade that I showed you is not appropriate. Can you tell the difference? That's what a market understanding is about. It's about trying underlying to get into alignment, and then it's random. That's what trading is. And then it's a business. If you're interested in the business of trading, I invite you to come to Bookmap Discord Trader Lab chat. And there's a lot of additional free education. Order flow with a high tier tool like Bookmap, which really allows you to see inside structure and market behavior. Order flow, stops, sweeps, iceberg behavior, absorption, and there's much more algorithm. Also, in the Trader Lab, there's all that. There's a library of webinars you can watch with a lot of real-time narration, up to 4 hours, as opposed to this where I'm really limited because there's a lot of other streamers and a lot of other good input. And Bookmap offers education, stocks, options, futures, market maker behavior, swing trading, crypto, of course, order flow, algorithmic behavior, and much more. And you're all welcome to visit the Bookmap Discord chat and also the Trader Lab. Download the PDFs, watch the webinars, and there's loads of additional education. Even trading contests. There's one starting now where you can win, imagine this, a lifetime subscription to Global Plus and $2,000. First place. Second place, I think, is a lifetime subscription to Global Plus. Pretty good if you ask me. So if you're interested in that and you want to kind of strut your stuff, visit bookmap.com and check it out. Thanks for visiting the Trader Lab. If you're in YouTube, how about a thumb up? I really appreciate it. I hope you find some value in what we do here in the Trader Lab. It might not be what you're used to seeing out on the, on the web and YouTubers and all those guys. What I do is really simple. We all think the answer lies in the complexity. In my opinion, it's just based on my experience, which you can see is 43 years, it lies in the simplicity because you can't replicate complexity if you have variable inputs. It's difficult enough to manage your emotions. If you can use a conditional process that's simple, you can be consistent. That means you can measure it, and the statistics are ultimately what give you the confidence to control your emotional state. If you're operating without a edge, which is what the casinos don't do, and that's why they're profitable, is they only play games with an edge. Our trades, our structured trades, or quote setups, are games. Approach it like a casino. Be the house, don't be the gambler. It's up to you to choose really which side of the table you want to sit on. Thanks for visiting the Trader Lab, guys. I will be active later in the Trader Lab like I do with audio inputs and ongoing narration if the time allows. Thanks again. Have a great day. Thumb up in YouTube and subscribe to the channel if you find education like this useful.